To the chemical division, the revenue for the quarter recorded was INR 1458 million, which increased around 16% from INR 1251 million on a year-on-year basis. The EBIT was INR 313 million, which increased from INR 273 million year-on-year. The sales in the domestic segment continued to record steady growth. While there was reduced volatility in the raw material cost, the sharp appreciation of the dollar kept the input costs under pressure. Coming to the consumer division segment, the revenue for the quarter was INR 505 million, an increase of around 115% on a year-on-year basis. The profit for the quarter was INR 4 million compared to a loss of INR 13 million in the last year. The steady improvements in the volumes driven by acceptance of our new product launches enabled this improvement in the financial performance. We expect the segment to sustain its growth momentum. With this, we can now open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, thank you. Good afternoon. So my first question is on the engineering part, and we have highlighted a point in our presentation that we invested some to strengthen our infrastructure for future orders. I mean, if you can just highlight where is it, what is it that we are strengthening, and what is the outlook there?
Sir, you are not audible.
Yeah, hi, Pratik. We have strengthened the design, planning, and execution teams as far as the infrastructure for engineering is concerned. There's also been upgradation of facilities, which has impacted the expenditure side. These are the important factors which have led to margin decrease.
That is sensible. My question was more from the internally, what have we prepared for the, I mean, because we see very healthy growth in order book, the pipeline that we have, your outlook seems very positive, at least for the near future. So wanted to understand what is it that we have done to strengthen this. I understand I mean, you take a hit for a quarter or two on your margins, but what have we done to strengthen this? Or which are those areas that we are improving on it?
That's what I highlighted, Pratik. The strengthening is of the design, planning, and execution teams, and also of the facilities. This is going to have a direct impact on the scale of operations that we are able to manage through these teams. As we look at the coming quarters where there is a substantial order book which we need to execute, we would need these teams to work parallelly, and hence the requirement for improvement of this entire infrastructure.
Okay, fair enough. So my second question is on the chemical. If you can highlight the Capex Plan that we had earlier announced, any update on the same?
Yes, the Capex Plan stays on course, except that we've had a long period where the concerned gentleman who would have given us the approval, which we were waiting for, that seat was empty for quite some time. And now we understand that the seat has been filled up. We should be receiving the due approvals in the near future. Currently, our expectation is that the plant will go into operation in FY23-24.
Okay. So this would take about 12 odd months once we receive the approval to put up the plant in operation again.
That's right.
Okay, fair enough. And the other debottlenecking that you are doing in our other chemical division?
That's an ongoing process, Prateek, and it continues. We have a lot of headroom there for expanding our revenues.
Fair enough. And sir, last clarification, we were in works to consolidate all of the various subsidiaries that we have as part of the parent company. Anything you would like to highlight there?
That consolidation of subsidiaries is also on course. We will start the formal process in the second half of the current year.
Okay, great. Good to hear. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Kiran Sebastian from Franklin Templeton. Please go ahead.
Yeah, thank you. Hello, sir. Thanks for the opportunity. My first question was on Capex. Just wanted to be clear about this. So we are still awaiting the environment clearance, right? Now, is my understanding correct?
That's right.
Right, and the person who is supposed to give the clearance finally, has been appointed. That is the status.
That's right.
And there is a high chance that we will be getting the approval, and then right away we can start the construction.
Again, correct.
Yeah, and parallelly, is there any plans to augment the capacity inorganically in case we get delayed with this capacity expansion?
As of now, our expectation is there will be no further delay. That's our understanding based on discussions. We are almost always on the lookout for opportunities inorganically. If we do get something which is very interesting, we will certainly evaluate that also.
Right. And the second question is related to Sri Lanka. So I see that not much execution is happening there. So have we at least ring-fenced the liabilities? So sometimes you see projects where execution gets delayed and you keep burning cash and you end up with a lot of losses. Can you just give me some color around the risk management around this particular exposure?
Sure. For one, we do not expect to have any credit risk in this job.
Okay.
We are not getting paid directly by the Sri Lankan government, and this project is funded by Exim Bank.
Yeah.
So to that extent, credit risk is not something which is on the top of the mind. We also feel that the costs on account of overstay, we are covered through our contract, and any overstay which is happening on site, as per contractual provision,
Right. Sir, thank you. And for the UP, would it be possible to give the details?
Yes, let me just. Vasant, are you there on the call?
I am there, but I just missed the question. We were disconnected. So what was the specifics of the question?
Mr. Vora, could you please repeat the first question that you asked?
Yeah, sure. So I wanted to understand what was the execution for UP during the quarter and the margins made on those for the quarter.
Yeah, the execution for this quarter was around 27 crores. And regarding the margin profile, we don't discuss the specifics of the contract in the con calls.
All right. So I understand from Mr. Patni what he gave the answer to the next question, that due to the strengthening of the infrastructure for the UP to gear up for the execution front, so the cost was front loaded, and going forward we would be seeing a healthy execution, and accordingly the expenses would not be increasing in line with that, and we should be seeing the operating leverage benefit. Is it right, sir?
Yes, that is our expectation. That's right.
All right. Sir, the other question was that during the quarter, we have got other income of nearly about, in the standalone I am talking about, close to 18 crores. Could you elaborate the details on that?
The other income primarily comprises of the interest income, and also for this quarter, because of the strengthening of the US dollar, we have an exchange gain of just around 8 to 9 crores.
Okay, the forex gain is 8 to 9 crores, and the balance is the interest on the loan, interest income basically.
That's right.
Okay. And the chemical division performance was quite steady. So how should we see the remaining part of the year in terms of the revenue growth, and the greenfield plant has been postponed to the next year. So how should, because we were operating at nearly the optimal capacity, so whether there will be a growth on the chemical division?
We will certainly see a good growth in the coming periods also. We expect the growth trends which we have seen in the first quarter to continue. For the year as a whole, we should see better full year margin as compared to what we have achieved in the past year. However, we still should make it contingent upon stability in commodity prices, also resolution of the supply chain issues which is affecting the commodity market, and certainly a stable exchange rate. So with those small caveats in place, we should be seeing a better full year margin compared to last year.
Right. Sir, and lastly, the bid pipeline of over 8,000 crores. Would it be possible to say, in how much percentage of the bid pipeline we would be in the advanced stage of talking, and the split between the domestic and whether it is in the domestic part of that, or whether it is in the overseas?
There is a mix of international as well as domestic opportunities in that big pipeline. And as far as the stage at which the discussions are, these are at varying stages of discussions. I would put roughly around 30% or so at a more advanced stage.
Okay. Fine. And sir, the capex for the year would be what? Considering the greenfield plant is postponed to the expansion is postponed to the next year, as and when we receive the clearances. So they are keeping that aside. What would be the maintenance capex for the year?
Vasant, can you please elaborate on that?
Yeah, our total capex will be in the region of around 60 crores, and the major capex would be in our enhancement of our membrane facility, the capex which is currently being done, and also the incremental capex which we keep on doing in the chemical segment, that will also be done. So in the region of 60 crores is our estimate of the capex.
Right. And lastly, what would be the mobilization advance received from the UP government, and are we paying any interest on that?
we are not paying any on the mobilization advance, but regarding the quantum, as I mentioned earlier for another question on the same contract, we don't discuss the specifics of the contract.
Okay. That's fine. Thank you, sir.
Thank you.
Thank you.
The next question is from the line of Santosh Kumar KC from KC Wealth. Please go ahead.
Good afternoon, sir. Am I audible?
Good afternoon.
Yes,
Good
please
afternoon.
proceed.
Yeah. I had one question regarding all these projects that we have. Do you have any cost escalation clause built in? For example, for the rise in input cost, did we receive any compensation from the project owners? That's the first question.
Yes, and what's your second one?
Yeah. The second one is about Sri Lanka project. So there, as I understand from the previous participant's question, that there is some work going on. So I wanted to ask that have we booked any loss on that or any expected loss, considering that this may not move for another year or so, considering the economic and political situation in Sri Lanka? So are we expecting any loss or have we booked any so far in the financials?
Okay. Let me answer the second one first. No, we do not expect any loss arising of it. As I explained, the overstay which is caused by the customer or because of the actions attributable to the customer is covered under the contract, and we can claim for this overstay. So those costs are not going to be a loss for us. And the other risks which are attached to this are the credit risk, which again I explained that we don't have a direct exposure to the Sri Lankan government, and because of that, credit risk is also not there. We do not expect to have any loss on this.
So is there any international body, for example, financial institution, which has given the contract to us?
No, this contract funding is through Exim Bank. That's why the credit risk is not there. Exim Bank of India.
Okay. So we are sure that the project is going to be finished, and sooner or later, the realization
We remain hopeful. We remain hopeful that very shortly the conditions for execution of the contract would improve, and we would go ahead with execution in consultation with the funding agencies and the Sri Lankan government. Only when we feel that the recoverability is not going to be a challenge and the execution can proceed at a desired pace, that is when we would go ahead and start invoicing for the balance of the plant. As we have indicated in our operational highlights and also in the introductory statement, that currently the project execution is moving at a very slow pace.
Okay. And regarding the second question about the cost of
is concerned, as far as price variation is concerned, some contracts, especially with the government and PSUs, they do have a price variation clause. And we managed to get
uniform particle size resins in our resin manufacturing plant?
Yes, we do.
Okay, thank you. Thank you very much. Thank you.
Thank you.
Thank you. The next question is from the line of Tushar Ragadade from. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, what would be the contribution from private sector in our current order book?
Let me see if I have that number handy. We should be looking at roughly around 40%, 40 to 50%. Am I right, Vasant, on that?
Yeah, I think around 40-45 will be a right figure. Yeah.
Okay. And sir, in the chemicals greenfield capex, what is the total capex plan and how much we have spent till date?
The total capex on that is expected to be in excess of 200 crores. At the moment, the execution of this new plant has not started. As we highlighted a little bit earlier on the call, we are waiting for the environmental clearance to be formally signed. Only after that we will start working in earnest.
Okay. And sir, in terms of asset turns, can you expect around 2 times for this capex?
You mentioned
revenue potential from this 200 crore capex. Any ballpark number?
Yes, it would be 2 to 3 times. It will take some time for it to reach the full capacity utilization, but when it does, it should be in that range of 2 to 3 times.
Okay. And one last question, sir. Any progress on our international orders we were looking at? Some large orders we were working with?
We continue to work on those. The movement on that, unfortunately, there is nothing yet to report on it. Hopefully, we will have something to inform you in the near future. As of now, nothing is materialized out of those.
Okay, sir. That's it from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Tushar Ragadade from Kamaya Wealth Management Private Limited. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah. Sir, what would be your gross profit margin for your chemical business, and can we expect the chemical business to increase in terms of share going 2 to 3 years down the line?
You're saying chemical business to increase in terms of share in the overall revenue?
Yes, sir.
Let me answer that, and then I'll ask Vasant to give you the chemical segment EBIT margins as we have reported. But in terms of percentage share of chemicals in our overall revenue, we certainly expect the chemical segment margins to improve substantially over a period of next 2 to 3 years. But likewise, we also expect the engineering margins to climb, as we have been talking about the overall order book and the pace of execution of those orders should be improving in the coming quarters and in the years to come. So, given both of these, I'm not able to accurately give you a statement on how much the percentage variations would take place in each of these segments from quarter to quarter. But on an absolute level, we should certainly see improvement on both of these segments.
Fair enough, sir. Thank you.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, Namaskar, sir, and thank you for this opportunity. Sir, I joined a bit late, so pardon me for any repetition. Sir, firstly, on the consumer product division, sir, how is this product going? How is this segment going to contribute going ahead? And are we able to make the key changes, or are the COVID factors now behind us, wherein that has affected the profitability and of this segment earlier?
COVID had certainly impacted the consumer segment substantially. I do believe that the current working environment has helped us to put the COVID factors significantly behind us. The segment as a whole is doing very well. On revenue terms, you would have seen that compared to the first quarter of the previous year, we have grown by more than 100%. The outlook going forward is also very strong. We will continue to maintain the growth momentum. Individual products.
Sorry, sir, your voice is breaking. Could you please repeat what you said?
Individual products which we have launched in recent times, they are also doing very well. The market acceptance is very good, and I expect these new products to start contributing in a big way in the coming times.
Sir, what kind of margins, EBIT margins, what kind of sustainable margins can we look forward from this segment? I think so on a top line of this time, on a top line of 50 crore, we did PBT of 31 lakh. So what should be the normalized margins and a sustainable one on this, and then I'll come to the other two segments. Sir, I'm unable to hear you. Hello.
If you evaluate the way consumer segment has moved in terms of its EBIT margin profile, it is a factor of the scale which we are being able to achieve for the segment. As the scale of operation rises, you will see sequential improvements in the EBIT margins. The products are quite profitable, and my expectation is that it will start contributing to a much bigger extent to the overall bottom line of the company in times to come.
Okay, and any ballpark set ideas you can give, because these are only at the break-even points which we are currently looking.
That's right. You're only looking at the break-even point now. But I would not really like to forecast the exact year-end numbers. It is a factor of scale which we are able to achieve. But you would certainly see substantially better than what you're seeing now.
So since just dwelling one more line, sir, since you are dwelling upon the utilization, so what is the potential of the segment going ahead on the top line basis, sir?
See, consumer segment is a very large segment. Potentially, the revenue could more than double in the coming 2-3 years. Margin percentage, similar to what we have achieved in the past year.
Right, sir. And on the utilization levels for the chemical segment, if you have made any comment, what are currently our utilization levels, and how have the raw material prices behaved for the chemical segment?
The utilization level for the chemical segment is roughly in the range of 70 to 75%. And you asked about the...
Yes, sir. Do we see any uptick also, sir? 70 are these the optimum levels?
Well, there is a reasonable amount of headroom available. We would certainly be looking at higher utilizations in the coming period. As we have been mentioning over the past few calls, we are eagerly awaiting the environmental clearance for our new greenfield plant. Once those capacities come in, we would be hoping to increase the capacity utilization percentage in the new plant also quite rapidly. So certainly we will be expecting a significant uptick from the current capacities.
Okay. And for the new plant environmental clearance, how much have we invested in the plant, and the product profile is significantly different from what we are currently doing?
No, the product profile is not going to be very different. Of course, there would be something new which will get added, but it's not a new product, and the overall product profile is similar to what we are doing currently. The plant is awaiting environment clearance, so we've not really started in earnest to spend on that. The overall Capex plan is in excess of 200 crores, and we should be expecting that plant to go on stream in FY23-24.
And how much have we invested in the new plant? Yes, ma'am. I'll come in the queue, ma'am. Just sir was answering, I just had. How much have we invested, sir? And I'll come in the queue for another 2 questions.
That's not a very significant amount as yet.
Okay. But the total capex is of 200 crore. That will happen only once we get the requisite clearances from the government authority.
Yes, it is significantly more than 200 crores.
Okay. And where it is located, where the plant will be located?
It's going to be in Maharashtra.
Okay. Sir, I'll come join the queue once again. So thank you for all the answers.
Thank you. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Sunil Kothari from Unique Investment. Please go ahead. Mr. Kothari, we cannot hear you. Can you please use your answer to ask a question? Mr. Kothari, you are not audible.
Hello.
Yes, please proceed.
Yeah. Hello. You are getting my voice, sir?
Yes, please proceed.
Hello.
Yes, we can hear you.
Hello.
But very feeble.
Hello.
Yes, we can hear you. Go ahead.
Mr. Kothari, if you are speaking right now, we cannot hear you. I would request you to rejoin the queue, please.
Sure.
The next question is from the line of Hemal, an individual investor. Please go ahead.
Yeah, hi. Thank you for taking the question. I appreciate it. Just very quick question on the chemical. You said it was 70 to 75% utilization. I just wanted to know, what is the last 3 to 4 year volume growth in our chemical business? Like if you have a CAGR or anything that you can give in volumes.
Let me check. Vasant, do you have a readily available number to give as far as volume growth CAGR over the last 4 years is concerned?
Last 4 years, I'm sorry, I will not be having right now.
Okay.
Okay.
I'll try to give you a ballpark, but I may be, off by a few percentage points, so I will not hazard that guess at the moment. But you can get back through Valorum, and we will be able to provide you that answer.
Okay.
So you believe like year over year, would it be at least last year to this year, or do you believe there is a volume growth expected, or this is all due to price realization?
Well, certainly over the last 3-4 years, we would have had volume growth, but I unfortunately don't have a ready reference to that number, and hence my hesitance in offering you a reply. But as I mentioned, I'll ask our investor relations firm to get in touch with you, and we will provide that number to you.
Okay, sir. Thank you. I really appreciate it. That's all from my end. Thanks.
Thank you. The next question is from the line of Sunil Kothari from Unique Investment. Please go ahead.
Yeah, thanks for the opportunity. Are you getting my voice more?
Yes. Now it's pretty clear.
Yeah. Thank you, sir. Sir, really hearty congratulations for such a good order book. After long, we are having sizable order book, sizable ability for further inquiries. Sir, my first question is, now, as expected, after last 2-3 years comparable of COVID situation and very difficult situation in commodity prices and volatility, next 2-3 years seems to be reasonably, hopefully better. So, and you rightly already started investing in designing capability, execution capability. So, which are the major focus area which allow you to say generate substantially higher execution in engineering division?
I think the opportunities to grow on the engineering segment exist both domestically and internationally. We are now looking at an inquiry bank of more than 8,000 crores. A significant portion of that is internationally also. We are hopeful that we'll be able to convert a good portion of this inquiry bank, and hence the need to expand our overall infrastructure, not just to execute the current order book, which we discussed was in the range of around 3,000 crores, but also to prepare ourselves for the incoming order flow from the inquiries which are under discussion. So we should be looking at a significant growth going forward, not just in the next couple of years, but the visibility which we seem to be building up is a good, healthy engineering segment over the next 4 to 5 years also.
Mm-hmm. So, sir, for that you will be having more vendor-based supply chain, or internally will be increasing our capability?
So we are improving our internal capabilities in line with what we would normally be expected to do. The vendor-based enhancement would be in accordance with the requirements of individual contracts. In general, the portion of contract which we would execute internally, that remains substantially the same areas, and there are significant amount of bottoms which we source optimally through a very wide group of vendors. There is no real necessity to evaluate that vendor base in general, but certainly we do that on a case-to-case basis depending upon the requirement of the contract.
Okay. Sir, on chemical front, I think it seems that we have really good inquiry and customer base. Interestingly, also we are already proven our capability and product acceptance. And because of this delayed environment clearance or whatever reason, we are not able to put new plant. But our existing capacity utilization is also low, maybe 70-75%. So which are the roadblocks for achieving 90-100% capacity before this new plant comes?
At the moment, there is a slight demand stress or pressure on the demand in the international markets. There is some degree of demand contraction or suppression or deferment, which we have seen in some of the key markets, especially Europe and the Americas, because of which the volume growth may not have happened to the extent that we would have liked. But it is also a question of movement from quarter to quarter. The first quarter is typically a light quarter, as you would know from the trends. Sure. And the capacity utilization will rise up as we move towards the next quarter.
Sir, my last question is looking at the higher utilization and the revenue momentum trajectory, what you are talking about. Mr. Randeep also in opening remarks mentioned about 2, 3, 5 years better engineering division. Overall trajectory of margin, EBITDA margin, which currently we are achieving is 13.5%, 14%. Can it cross 10% plus? Would you like to comment anything qualitatively on that?
Well, I mentioned towards to an earlier question I had responded that we are certainly hoping to equal or better the year-end margins achieved on the engineering as well as the chemical segment. Certainly on the consumer product side, we are very hopeful that we will be in the black in this year. So if you take all of this combined, I am very hopeful that we will improve the overall margin percentages.
Great, sir. Wish you good luck. Thanks a lot.
Thank you. Thank you so much.
Thank you. The next question is from the line of Madhusudan Reddy, an individual investor. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, this is regarding strengthening of our human resources. As you elaborated, we have a very good growth pathway for the next 5 years. So you're strengthening your resource base. My question is regarding the strengthening of your human resource base with regard to the board or the senior management, this thing. My only, and as if I'm thinking out loud, adding a young talent into our board or our senior management team without affecting any of our philosophy of our conservatism. Your thoughts on this?
Thanks for that question, Mr. Reddy. We have a culture at Ion Exchange of which is very pro-employees, and as a testament to that, a large number of our senior management team has been with the company for more than 25-30 years. We continue to adapt a policy of being extremely pro-employee and really value the contributions made by our experienced team, both in terms of their managerial and technical capabilities. Having said that, the induction of young blood into the entire team is also necessary, which happens at various levels, both at middle management and junior management level, sometimes at a relatively more senior management level also. We certainly do not and will not compromise on the overall values and principles which the company carries. That would be the underlying factor of the kind of conservatism that you talked about. We really value the wisdom which comes out of this workforce constituent, and therefore there's no intention to change the ethics.
Yes, sir. Thank you, sir.
Thank you. The next question is from the line of Tushar Agadate from Kamaya Wealth Management Private Limited. Please go ahead.
Yes, sir. So just want to confirm about the Capex, sir. As per the application, so you are increasing the capacity of anion and cation resin by at 6,000 metric ton each, and so the amount would be 400 crore. Is my understanding correct, sir?
As I've been mentioning, yes, the figure is going to be well in excess of 200 crores, and the capacity expansion would yield to doubling of our current capacities.
Okay, so sir, so can you just tell me how many phases will be there in this expansion?
There will be 2 phases. That's what is currently planned.
Oh, fine.
So in the first phase, we will double our capacity, and then thereafter we will again add an equivalent capacity.
Okay, sir. And sir, what would be a gross profit margin for chemical business?
I think, Vasant, can you indicate the EBIT margins for the chemical segment?
So the gross profit margin, the amount.
So the segment margins, what we are disclosing is 22% for the chemical segment.
Fair enough, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes. Hello.
Yes, please go ahead.
Yes, sir. Sir, for the capacity addition in the chemical segment, the expanded capacity which we are augmenting currently, what is our current market share? And for the industry as a whole, how much, whether the product is imported currently or is totally indigenously sourced?
Our current market share in India for resins would be in the region of around 40%. There are imported resins available in the market, and they have been so for a large number of years. The capacity augmentation is targeted not just at India, but substantially for the international market. For the international market as a whole, our global share would be in single digits. So there is a lot of headroom for expanding our volumes in the international market.
And sir, how would we sourcing our raw material? Our dependability on the raw material. We must have factored that also. So if you could throw some more light on the same, that requirement will also go up in proportion.
Certainly, raw material requirement will go up in proportion to the volumes which we drive. These raw materials are sourced both domestically and internationally. And when you look at the international component, it is quite widely sourced. We continuously strive to increase the geographic spread of our vendors to ensure that there is no individual geography which has undue concentration or an individual vendor which has an undue concentration.
And what would be the key raw material mix, sir, in percentage terms? What are the key raw materials for the chemical segment?
It's a wide group of raw materials. There are some which are petroleum based, and there are some which are non-petroleum based. A significant percentage would be petroleum based.
That's correct, sir. Sir, lastly, sir, as you have mentioned that first quarter is generally a soft quarter in terms of the execution cycle for the engineering segment, and you also mentioned that we would be aiming for engineering segment posting revenues higher than what the last year being, and the margins, if not, it will be equal to what last year was. So this understanding is correct, sir, for the engineering segment as as an asset as a whole?
Yes, we will certainly be posting more than what we did last year, in fact, significantly more. For the company as a whole, I would expect a 30 to 35% growth on top line.
Last year on a console level, it was 935 crores. We are looking at a growth of 35% on this one.
30 to 35% for the company as a whole, not just for the engineering segment.
Okay. But if we could look for engineering as a segment, I think that is the measure of your contribution to the bottom line.
That growth will be more than 30-35%.
That will be more than 30-35%. Okay.
Yes.
So there will be lower growth for the my question was, since you have already commented upon the consumer products growing significantly, and that has been seen in the first quarter at a 100% growth, although it was last year was a COVID affected quarter, the comparables are not there, but still we have grown, and you guided you are looking for engineering to grow higher, so there will be lower growth for the chemical segment in that way, in that vicinity. Otherwise, this 30-35 on an overall, how will it match the number?
The engineering segment will go at a higher pace, and as far as chemical segment is concerned, it will continue its growth momentum, which is not as high as the engineering segment is.
Correct. And on the Sri Lankan part of the story, sir, what would be the receivable number from them as on date? And do we that have any interest component also as the delay being?
Vasant, can you answer that, please?
The residual part of the contract which is remaining to be executed is just under 250 crores.
And the receivable numbers are from them, or the ones which we have executed also, have we received all the money, or the money is retained by them? What is the?
Not give any specific details about the contract.
But in any case, the receivables, if any, are not from the Sri Lankan government, but the money would be coming from Exim. And that's why we have been maintaining there is no credit risk involved.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. N.M. Randeve from Ion Exchange India Limited for closing comments.
Thank you all for participating in this earnings con call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, we will be of happy assistance. We are very thankful to all our investors who stood by us and also had confidence in company's growth plan and focus. And with this, I wish everyone a great evening. Thank you.
Thank you. On behalf of Ion Exchange India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.